This is Bob and Sally. They want to buy a home. They've managed to save some money for a down payment, and they have pretty good credit, and they're watching interest rates very carefully. But they still have a bunch of questions and aren't really sure how much they can afford. "I could plug some numbers into an Excel spreadsheet," said Bob. But before Bob could explain his cost-to-income ratio matrix thingy, Sally whisked Bob off to the office of William Hines III, a professional mortgage lender and a friend of the family. "Pretty smart to be looking now," said William, who likes to be called Bill. "Interest rates are really low, about the lowest in the past 50 years, and that's a big deal. It can save you a ton of money. Let's say you take a mortgage out for $250,000. At 5%, your monthly payment is $1,342 per month. Now at 4%, your monthly payment is $149 a month less. And if you continue that over a 30-year mortgage, it really adds up. Let's see, it's over $53,000. Wow, and that's all interest. So you see how lucky we are right now with interest rates so low. In the year 2000, interest rates were at 8%. Figure that one out, Bob. So Bob did. Holy smokes! The difference between a 5% and an 8% is $500 a month, or $180,000 over the life of the loan. Really? They can't go to 8%, can they? Bob asked with a hint of panic. Well, interest rates have always fluctuated. In the 80s, they were between 10 and 16%. They settled down in the 90s to about 10%. Today's rates are crazy low, and you can lock them in for 30 years. Will they go any lower? Asked Sally, hopefully. I don't think it's possible. I would recommend locking in a rate as soon as you can. And of course, you can buy points to reduce the interest rate even lower. What's a point and where do I buy one? Asked Bob. You can buy down your interest rate from the lender. Typically, a point costs 1% of your loan amount. Say your loan was $200,000. You could buy a point for 1% or $2,000. And will that lower our interest rate 1%? Asked Sally. No, normally it would lower the interest rate by 0.125%. So in this example, that's only $17 per month. So you would need to stay in this home for a very long time to recoup that buy down. Under these circumstances, I would say you're better off putting more money down or make improvements that would add equity to the home. Remember, there are 3 variables in the mortgage that affect payments and the cost of the loan: the amount of the loan, how long you finance, and the interest rate. Let's get started. I want to lock in, said Sally. Well, let's get you in touch with a realtor first. But I can work with you today to get pre-qualified for a loan, and when you find that perfect home, you can act quickly and get that home. And jot down this website. It has information and links for lots more home buying information.